If you're studying or you're thinking about studying getting a funded account in order to pass it, in this specific video, I'm going to give you a super aggressive strategy that you can implement today and pass your funded challenge in 10 freaking days. So in this specific video, this is what I'm going to teach you. Hey everyone, Christian here on YouTube. Welcome to a brand new video for the channel. Today, I'm gonna teach you the most aggressive strategy that you can use to pass a funded challenge. But hey, if you're new to my channel and you're into Forex, crypto, or any type of making money online, this channel is for you. Hit that subscribe button below, smash the like button if you find value at any time during this video, and let's begin. The first thing that you need to know if you're gonna get into the funded challenge world is what's the best company that you can join in order to start making money with funded accounts. And definitely the best company right now in the world is actually Hola. Hola is the company that I've been using for like a year, almost like 11 months or something like that. And that I have been recommending simply because that's the company that gives me the most trust in the industry. As a matter of fact, I've actually had a $300,000 funded account with them, a $50,000 account funded directly with them. So I had $350,000 that I used to trade every single day using this specific company. So if by any chance you want to use the exact same and trusted company, I'm gonna have the link to it in the description of this video. And if by any chance you actually want to get a discount, if there are no discounts at the moment that you're watching this video on the company, go ahead and use the promo code BLW15 and you'll get a 15% off on any account that you decide to get. So the first thing is to actually get a safe funded company. So here it is. Now let's go ahead and talk about the strategy itself. And I want to explain two things before I actually give you like the chart information. Number one, this will work with US 30 and NASDAQ only. I would suggest that you select only one. Second thing, this will only work at near market opens, which means at 13 GMT, 1330 GMT is basically when the market opens. On like a 13, 15 GMT, you already know for sure what is it that you need to trade with in this strategy. If nothing happens within 7 and 1430 GMT, it's over. You don't need to trade that day and you can just move on. We are targeting to trade 1, maybe 2 trades per day. That's what we're gonna do, and I'm gonna teach you exactly how you're supposed to do it in this video. So keep that in mind. Only US 30 and NASDAQ and only a near market opens. Now, this strategy is very similar to the breakout strategy that I always shared, but this time I'm gonna make it even easier for you because we're not gonna look for the breakouts and what's the demand and supply. No, this time we're just gonna look for a cross on stochastic. Yep, stochastic on the period of 14, 3 and 3, and that's pretty much it. The RSI, we don't even need that, so I can just delete it. One thing that you need to understand is that whenever there is a cross going down on stochastic, there's usually a down momentum, and when the price is when the stochastic is crossing up, like right here, there's usually an uptrend momentum. This happens during the entire day. You don't need to trade during the entire day. You need to trade during market opens. Why? Because when market opens, usually there's a lot more volume on the same asset. So we could talk about 3, 4, even 5 times more volume when the market opens. So this is what you're gonna do. Literally right here, I'm looking at the candle for 5 a.m. So on the next candle, this is the candle that expired at 7 a.m. in the morning. So right here, I already know that the stochastic blue line is above the orange line. That tells me that the huge momentum should go down. Should be a sell position, okay? If at the time that the market is about to open, the blue line is below the orange line, that tells me that the huge movement could be going up. I'm not guaranteeing anything. I just want to say that like right now, it's not guaranteed, but it happens very often. At least 70% of the time, 60% of the times. And we're going to be targeting a 3 to 1. That's it. 3 to 1 in risk reward. We're not gonna go to 5 to 1 or anything like that. 3 to 1, which means you're gonna risk 1% of your balance in order to try to make 3% of your balance. Depending on what prop firm or funded challenge that you get, you're usually gonna have a target from 8 to 10%. So within 3 to 4 days, you should pass your funded challenge. Obviously, if you lose one day, then you retract 1%. As long as you keep the 1% risk and the 3 to 1 on profits, you're good to go. Now let's go ahead and dive into the chart. Here, I already have where is it that the price is gonna move? Should I enter literally right now? No. I'm still gonna look for a breakout. So I'm gonna select a support level and a resistance level right here. Why a resistance level? Just to have it as reference. I'm gonna explain exactly why right now. But you're gonna enter a sell position literally at the breakout right there. Let's say that you wanna put it somewhere here. You're gonna go 3 to 1. There you go. If the price starts to go down, activates it, and it goes back to this level, and there's still no cross, I might re-enter. That's the reason why. I'm gonna switch to 15 minutes just to see what's gonna happen. And this is only at 7:30. 7:30. Which is right here, 7:30. You're not gonna, usually you're gonna place the pending order within 7:20 and so on. Now that we know what's happening in 1 hour candlestick, we know exactly what we could do. If you notice right here, it's even reaching a resistance level. So we could even jump into enter right here. We're not going to, this is for beginners. The next candlestick is the opening market, and you can see, boom, it crossed going down. It hit a 3 to 1. 1 hour candlestick, even easier. Boom. Why does this happen? It simply happens because the volume of the market, it's bigger when near market opens. And since we're combining this that we know as fundamental trading with the technical trading of having the stochastic oscillator, we pretty much dominate the market. Take a look, 3 to 1. Don't get too aggressive on it. Now let's go ahead and take a look at the next day. Somewhere here is the next day. I'm not even sure what day is it. Wednesday. All right. This is 2 a.m. All right, 5 a.m. All right, this is the next one. All right, so this is the next candlestick, and this is what we're gonna do. We're gonna take the exact same line. We have a resistance, and we have a support right there based on this little level right here. It could be here. I'll go here. All right, so we now have a new level of support and resistance. But guess what? The stochastic, yes, it's looking in a good position to start crossing up. It's a little bit overbought, so this is what I'll do. I'll go ahead and enter right here a buy position right there. 3 to 1. 3 to 1. Now, I can go to 15 minutes in order to share with you exactly how we do it, but I'm gonna move my entry to 7:30. All right, so as you can see right there, this should be my entry at this specific day. So I can move. This is the candle, and the next candle is the one that's gonna open the market. All right, it didn't activate, and it's actually going down. So today, we don't trade. It didn't go in the direction that we wanted. Therefore, we're not going to trade. Why is it that it continued to go down? Simply, I think because it was overbought. So it needed to make a price correction. But we didn't lose any money. We're 3% up, right? So what we're going to do right now is we're going to go to the next day. All right. Oh, shoot. All right. I actually made a mistake right here because I forwarded too much. It's still, this is over, but anyways, so I would actually say, I mean, the crossover should be exactly the same. Obviously, it could be like cheating, you know, because I already saw the movement of the next candle. So I'm not gonna take this as a consideration. Let's say that this day you didn't trade. Let's just say that. We're gonna look for the next day. This is Friday anyway, so I recommend you to trade on Monday to Thursday. If you want to, you can trade on Friday. It's just that sometimes it's a little bit more volatile than usual. All right, so here's 5 a.m. We go to the next candle, and this is what we have. So we have a resistance level. I'm gonna put it right here. And we have a support level somewhere there. Now, this is a day for a sell position. Why is that? Simply because you notice that first of all, stochastic is overbought. And second of all, is in a nice position to start dropping. So I would say somewhere there is a good position. I'll go to 15 minutes to share with you some more realistic numbers. And there you go, 7:30. And let's see. In 15 minutes, the stochastic looks different. The next candlestick is the one that is gonna open the market. All right, starting to go up. In here, I'm not gonna trade either. Did I lose money here? I didn't. Why? Because it didn't go into the direction that I thought it would, so I'm not gonna trade. Okay, so we have 1 day of winning trades and 2 days where we didn't place any trade. This strategy is all about the patience. Okay, you have to be super patient with the strategy so that you don't actually make the mistake of, like chasing trades or anything like that. Right now, you can see this is a completely overbought condition. It's literally crossing up. I honestly wouldn't even trade on this one. It might go up. I wouldn't trade on this one. It's just too unclear as to where it will go. You can see right now it actually dropped. I wouldn't enter there. Honestly, this would have been a day where I didn't trade. Still, we are within a week. We are on Tuesday, on Wednesday right now. We move to the next day, to the next candle. It's 6 a.m. All right, we have a support and a resistance level, and it looks like the price could start jumping and have a nice breakout going up. So I'm just gonna put my setup right there. We're gonna switch to 15 in order to see what's happening on a shorter time frame. We're gonna move it to 2 slots so that you can actually see it at market opens. The next candlestick is the one that's gonna open the market. We'll see what's gonna happen. All right, started to drop. All right, that's another day we're not gonna trade. Did we lose money here? We did not. Right now, we actually reached a support level. And just like that, you continue to actually trade. You can realize though, that on this specific strategy, you are going to have days where you're not gonna trade. Just because you didn't trade, that doesn't mean you lose money. As a matter of fact, you are going to make money when you're actually when you have an actual trade that you can place. Right here it's 5 a.m. or at 6 a.m. So we have a resistance and we have a support. We don't even have a support right here, honestly. But I would say this breakout should be the one. It's pretty uncertain, to be honest. But at least we have a stochastic crossing down. So we're gonna move to 15, 2 slots right here, 7:30, and we'll see. Yeah, I think the price will actually jump. Yeah, it did jump. All right, now it dropped. Yeah, this was probably the first loss that we had within a few days. Let me look for a new opportunity that we can use as an example as well, because otherwise we're gonna spend here hours. Okay, here we have an example of a trade that you should have closed with some profits. This is another opportunity to share with you, what is it that you should do in the middle of a trade. If it doesn't go within the same hour directly to the take profit, it's most likely that it's not going to, simply because at the time that the candlestick expires, what US 30 or NASDAQ is going to do is going to start consolidating the market. So there's not going to be a huge down movement, at least not often, right? Unless there's news or something like that. So if I were you, I would have closed my trade somewhere around here. Then 50-minute candlesticks will explain a little bit better. But I would probably close it somewhere here, and it would be a 1-to-1. Honestly, we can take it as a break even because you should move the stop loss to break even. But yeah, I guess you get the idea as to what I'm trying to teach you in this specific strategy and how simple it could be to actually use stochastic oscillator just to determine what's going to be the next big movement of the candlestick or of the asset. And it should be obviously for complete beginners, it shouldn't be, take a look right now, there was a momentum pushing down, so it started to retract. So you should close the trade at the time that the 1 hour candlestick actually closes. You should close the trade as well. Nothing good is going to happen within the next, let's say 1 hour. Now, I did mention that you could pass your funded account within 10 days. This is obviously depending on how many trades you're going to be taking. But one thing that I can tell you though is that there is big movement according to stochastic oscillator, almost all of the time when it comes to US 30 and NASDAQ. So what you need to consider is what's going to be your entry point. I told you to enter with the breakout so that you can have a double confirmation, but you could actually have a combination and say, hey, yep, there is going to be a movement because of the stochastic, somewhere here, but I do have a support and resistance level. So I would say that even before market opens, you could have said, hey, this could be a point of retraction based on the previous resistance level that we had, and you can go to a 3-to-1 here, or just go to the support and resistance level right there and see what happens. For instance, right here, it actually crossed going down just like it happened even before market opens, and now it reached a 2.8 to 1 or something like that, a 3-to-1 at the end of the day. But play with the stochastic during New York market open times. Literally right here, you can see that it crossed going down. So in my opinion, this is just my opinion, it could actually jump like on the next candlestick simply because of the stochastic oscillator. Like as you can see right now, I'm pretty much moving and playing around with the technical knowledge that I have, and I'm sure you do as well. You have some technical knowledge as well. Take a look. Right now, it literally reached a 1-to-1 on risk reward ratio, so you could have just closed it right there if you wanted to. Right now, since you closed it and it dropped back down, I would even go into this support level again, simply because I know the fact that it actually reached this support level and that the stochastic oscillator is in a nice position. It could give me a great jump. I would close the position with this candlestick at 1.77 risk reward. Just like that, today I have a 3% profit, and so on. The point of the strategy, and the point that I want you to understand, is that how important is the stochastic oscillator in 1-hour candlesticks when it comes to US 30 and NASDAQ. Give that a try. Super important. Try it on demo before, or risk very little. But once you actually get the hang of it, make sure, for instance, let's go ahead and take a look at what happened today. Once you get the hang of it, make sure that you actually risk 1% or at the most 0.5% of your balance in today's to passive fund the challenge. Right here, these are the signals that I sent today, but honestly, it didn't go well. I mean, didn't activate. So this is 4 a.m. I'll go 2 candlesticks more, and as you can see, it already crossed. So what I would have done before right here, I know there is a resistance level right here. Obviously, I'm taking a risk. Trading itself is a risk. But I would have gone somewhere around here, like a 3-to-1 right there. Obviously thinking about maybe you can close it before. Once you actually activated, this was a 5 a.m. in the morning, then 6 a.m. it actually dropped all the way over here. It didn't reach the 3-to-1, and boom, it hit a 3-to-1. How? Just following what the 1-hour candlestick is telling you with stochastic oscillator. So hopefully this, oh shoot, I didn't share my screen. There you go. So hopefully this actually makes sense. Now, how much should you risk using this strategy? Look, there are so many different accounts with Hola Prime, but I would say 0.5% to 1% is good. There are some accounts where you only have like a 3% daily drawdown. You should never risk that into one single trade, especially because of commissions and stuff. So I would say 1% is good, especially because you're going to be placing one position a day. It's like extremely like rare scenario where you're gonna place 2 positions. Since you're just gonna be placing 1 position, 1% is good. If you don't feel confident enough, you can use 0.5%. Obviously, it's gonna take you a little bit longer to pass your funded challenge, but you only need 3 to 4 winning days in order to pass your funded challenge. As simple as that. Take a look. 3%, 3 days is 9%, 4 days is 12%. And depending on what account you have, which we're gonna talk about in just a little bit, it can turn in a lot of money. Now, which account is the one that I recommend you? The best one, the best account that you should buy with Hola Prime. Look, we should go standard right here. And standard, I mean $100,000. It gives you like a round number that is super easy to use. Today they have a 50% off, by the way. You can go one step, 2 step, it's either up to you. The only thing that I do recommend you to actually use is a Prime account, because of this news trading allowed. What happens with the news is that during the New York market open sessions, there's always news, or at least 90% of the times there's news within 6 a.m. to like 9 a.m. And so you are going to trade during news with this strategy. So definitely go with news trading. So the prime account that you can buy for $100,000 for two-step account is $300 and $325 for a one-step account. If you decide to go with a direct account, which is really up to you, you can start with as low as $5,000 with 161. The maximum is $100,000 with $2,800. The platforms that I recommend, Match Trader, DX Trader, C Trader are good. MT4, MT5, honestly, I don't use them because it's too complicated. But let's say that for $300, you could be making 10, 12% per a month. You could make a lot more based on this strategy. You saw it. So you could be making around $12,000, $15,000 a month. And since you are going to be withdrawing monthly, 95%, bi-weekly 80 or weekly, I definitely recommend you monthly, 95%. We're talking about every $10,000, you're going to withdraw $9,500. I'd leave you with that specific strategy right there, which is super cool and super simple. And yeah, go ahead and start trying it starting off tomorrow morning and let me know in the comment section how it goes. Thank you for watching this video, and I appreciate if you smash the like button. I hope you enjoyed it, and more importantly, if you have any questions, comments to share, you can put them in the comment section. More important as well, be subscribed for more content just like this one. Keep trading safely, and I'll see you on the next one. Peace.